Hey guys, Mike here. So, oh boy, what a crazy volatile day. I mean, this is one of the most volatile days I can remember, and that's saying a lot for the last year. I'm sure there's been, a couple more volatile, but I mean, when I say volatile, I mean the swings were just insane, right? I mean, if you were sitting there watching it, you're like, holy cow. And I'll show you what I'm talking about in case you were at work and you missed it and stuff. But again, we'll get into all that. I mean, you got Netflix, you got Tesla. I mean, oh boy, yeah, it was a heck of a day in the market, let me tell you. And I gotta say, and we'll get into this, but I mean, you have a lot of housing data drop today, right? A lot of jobs data. You had Jerome Powell. He spoke at 12 too, by the way. He ended up getting escorted out, by the way, saved from some Green Initiative group that invaded him. I'm just kidding. I mean, they rushed him out, but he brought him back, I guess. I can safely say I honestly didn't listen to a word the man said, which was good. I just couldn't do it again. I've listened to him too many times. And I can go up there and give any speech he's going to give now, to be honest with you. I mean, I think we all could. Okay. But, when you look at the housing data, this chart is just amazing to me. I mean, I feel bad for new grads. I'll be honest with you, for the younger folks. I mean, I couldn't imagine this. This is what you need to buy a home now, right? You need to earn about 115K. And when I look at this, I'm looking back, in 2012, I graduated way before this, but, you just look at this in like 10, 11 years ago, what you had to do, and it was half. It was half. It was like 50 something thousand, right? And I mean, just look at that. That is amazing to see that. I mean, if you were graduating college right now, or I mean, forget trying to get married and have children and buy a home. I mean, that's just not going to happen. Even buying a car is a struggle right now. It's kind of nuts. We'll get into that in just a minute. But, of course, why is this? I mean, we had a lot of housing data drop today. Ooh, look at that. U.S. existing home sales. I know I'm not selling mine. Are you selling yours? No, we are not, because we are so spoiled with 2 to 3%, or some of us even got 1.4% mortgage rates. Who in the heck's giving that up and going to pay even more for the house? I mean, unless you're moving from a much more expensive cost of living type of state to a cheaper state, sure you would, but no. And so what does that do? Inventory is going to be low. Why is inventory going to be low? This is housing completion total minus new private housing under construction. Well, we're not selling, and then the builders are slowing down what they're building on purpose because they want to keep the supply at record level lows, right? Because that keeps prices higher and stuff. And not to mention, it's probably more expensive to build now than if they wait maybe a year from now when something happens, right? And so that's super low. What else we got? Oh, look at that right there. The NBA U.S. Purchase Index, right? Again, it goes back to like 1993 or something. It's been at this level. So, I mean, it's just a mess, right? Because just not selling a lot of homes. I mean, when you hear the number and you think, wow, on a global scale, or I'm sorry, on a nationwide scale, that's just not a lot of homes. But, on top of it, I mean, the good news is people are still finding jobs, even if they're just part-time jobs, right? Maybe you're finally going to see jobless claims start to tick back up. Looks like it's trying to round up here, right? Like it did to the left up there. That's what the Fed wants to see. They may not say it, but that's what they want to see. Because even Jerome Powell said, yeah, we're definitely dealing with a very stubborn economy today. And then you look at continuous claims. Well, that continues to tick up. And that's, of course, what Jerome Powell didn't want to see. They just can't really come out and say it because obviously that would. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. Send the stock market and everything else crashing and burning, most likely. So they can't come out and just say that, of course, because their job's actually full employment, but also to get inflation under control, which he says is still way too high and stuff. And so I'm thinking about it today, and I'm even asked people in the Discord and stuff. It's like, I'm going to sit down on a piece of paper and start doing like a dot plot or something, right? Because it's like, here's housing. Why aren't people buying? Prices are way too high, even though in a lot of areas, I listened to a gentleman today, they are coming down in certain areas, but remember, they're coming off record level highs. So they're still way above what was norm, right? And then rates keep going up, I'll show you the 30-year hit 8% yesterday. And so you got that going on. And of course, why is that? Because it showed you have a shortage of inventory. And of course, the rates are high and the price is high, right? So you have three things going on there. Then you have with employment, of course, people, like I said a year ago, I know people were griping and said, oh man, people working 3 jobs just to make ends meet. And I said, yeah, the key word you just said was they can find 3 jobs. In 2019, you wouldn't have been able to find 3 jobs to make ends meet, right? But you're still able to do that, which is shocking to me. It's holding up as well as it has, okay? But that's what's happening, right? Then you got energy, oil. What do you have going on there? They're coming down, but they're still high, right? Why are they still high? Because as you've seen these countries say, we're not going to produce anymore, right? They want to keep the price as high as they possibly can because it's a business. I get that. So they'll keep, the inventories down as low as possible or as much as they can, right? And so I'm sitting there thinking, if you're connecting all the dots to this, it's like, isn't there only one solution to solve this to actually get us back to normal? Isn't it a recession? I mean, is it not? If you have a recession, what happens? We stop traveling, driving so much, oil inventories go up because they're already planning way ahead of how much they're going to produce anyway, right? What would happen to housing? Well, they're just going to grind to halt the building. They'll keep building, right? But people aren't going to be buying at all at that point in time, so inventories will go up. What happens to rates? Rates, because that's when the Fed drops them. Rates will come down, prices will come down. That would normalize that. What happens to jobs? They go away. Nobody's finding 2 or 3 jobs anymore. Now, a lot of people can be put on the streets, and I hate that. I'm just saying it always happens every recession. I don't want that. But I'm just saying it would tighten the labor market, right? With the Fed, okay, cool, we got it back under control, right? But the problem is when I go, A plus B plus C equals, and I look at the side on the right where it's equal, I go, wait a minute. Well, normally the Fed would drop rates and all this good stuff, but what does the government do in a recession? They spend more than ever. Well, all of a sudden, guys, we already have a $2 trillion deficit now, which is why these yields are surging, because people are more hesitant to buy those long-dated bonds because I don't care if we're America or not, you're just more risky, right? And so the 20-year went pretty good. The auction yesterday, by the way, went pretty good, decent. But the 30-year is tough, right? And so if we go into a recession, which means our economy is even worse, doesn't that make us more risky? And then the Fed, or not the Fed, but the government has got to start spending even more money to try to get the economy back on track. So now we got to take a $2 trillion deficit. What? Up at what do you think? $3 trillion? Well, that's a lot more debt to issue. And people are going to say, I need a lot more sugar to do that because you guys just became a lot more risky, right? And so wouldn't yields just stay relatively high? I mean, could the Fed even drop it? And if the Fed does drop the rates, what happens to inflation, right? I mean, I'm just curious. Like, what do you think? I'm just not getting A plus B plus C equals what it normally equals. And so trying to figure it out, just spitfiring with you. And always, that's the thing about this community is I like to hear you guys' opinion because each one of y'all got different expertise and stuff, and you're out there in the real world. So let me know what you think. I'm obviously missing something in the equation on that one. So, or maybe it's just simpler than we think. We go into recession, everything turns back to normal. Could happen. Now, a few things to really watch out for here. Here's a 10-year once again. This was yesterday right here when I did the video. Look where we went today. So, again, it won't go up anymore. Keeps going up, right? The DJT, this is the Dow Jones Transportation. I know I did a members video on this. I don't know if I told you guys about it. I'm pretty sure I told you guys about it. It's very important. What's it done? It's lost its 200, and it lost that trend line, which goes back to October today. And so, again, transportation is very important. When this tanks, that usually means recession's on the horizon because this is the backbone of our economy. Trains, planes, automobiles, all that good stuff to get all our goods around this country. Again, could be a false breakdown, could move up tomorrow. We just got to see, but keep an eye on that. Now, what I was talking about, how crazy the Qs were. This is the Qs. I put this in the Discord. I said, man, I see 6 1% or more swings in one session, a possible 7th, which we didn't get. It just kept tanking. But look at that. I mean, that is crazy. And I did round up. Some of these were 0.94. One was 0.97. But that one right there, the last end of the day, it was like 1.4 or something. I mean, that's crazy. That's huge swings. But as I told members, and I'll tell you guys, you have to take a step back and look at what's happening. All we did was continue to wedge. This NASDAQ 100 continues to wedge tighter and tighter. And what happens? Explosive moves happen. Again, one of those weekly fair value gaps is going to be a magnet, right? That's an imbalance. I'm not sure which one it is. Obviously, for Tesla, it was to the downside. But when you look what happened to Meta, what happened? It exploded up. Google exploded up. Amazon exploded up. So you get it either way, okay? Now, look at IWM. Obviously still a hot mess, but what's it doing? It's coming into the supply zone, which has held since last May, it looks like. And so we'll see if it holds up this time. It ranges anywhere from the top at 170-ish down to around 164, if I'm not mistaken. So we'll see if we get another bounce. I mean, it bounced off 170 like 4 times today. But as you can see, it's held up many, many times here. So again, we'll see if we finally get that bounce or not. And then when you look at Netflix, I mean, this is the thing, right? Look at this explosion up. I mean, that is crazy. I got to go add in here this gap. I mean, it reminds me almost like NVIDIA, right? We'll put this in here. That's a big gap to fill. Again, it came up to that trend line right there. That was resistance. If we even, and I even drew a line right here saying here's going to be resistance. It's where the 50, and you got another level right there, and it ended up hitting that. As we can say, I'm going to go ahead and put the 50 on here. So you can see what I'm talking about. It did regain its 50 today. And so that made sense for it to have resistance right there. We'll see if it can hold or not, because that is a huge move up. And we look at it, I mean, obviously we could get a rejection down there because it is a big move. But if it can make it over 406 right there, then you're going to look at 418 as your next resistance. It's still in that channel. And it's kind of funny to me that maybe I missed something. I didn't really read it as much as I did with Tesla's earnings call. But I swear they said they had 3 million more subscribers than expected, but revenues came in line. So it kind of struck me as curious. I'm not sure if something I missed and all that. Maybe there was. But let me know in the comments if you're a big Netflix stock person. Please educate us on that one. Now, Tesla, obviously, we talked about it, was in this wedge right here. It was in the symmetrical triangle, just wedging, just like I just showed you on the NASDAQ. And we talked about how it could explode either way. And everybody was probably 50-50 on that when I looked at the comments. And of course, it went to the downside. And I just did a whole members video on this, you know, telling them exactly why, letting them listen to Elon Musk, because that's why the stock really tanked in after hours, because he did something CEOs aren't supposed to do. He told the truth, and I'll leave it at that. But you can see there was a gap right here that was left a while back. I went ahead and erased that because it completely filled that gap right there. You can see there's a 200 right there. And again, I gave them all the levels already, but just look at where the 200 is at. See if you get a nice little bounce right there. And again, it leaves that big gap above. So again, let me know where you think Tesla's going to go and where you think it's going to bottom at in the comments. Now, the big problem here, one of them is the shrinking margins, right? I mean, the margins continue to go down because they keep lowering prices. But again, a lot of it just has to do with Elon Musk, the CEO and stuff, just breaking the cardinal rule of never telling the truth. And so, which of course he did on the earnings call, and people freaked out about it. So you never do that. And for the record, I appreciate him actually telling the truth. Now, revenue growth here for Apple. Boy, I tell you what, remember, it's treated different than any other stock. If this was any other stock, it would be down 20, 30% right now. But it's Apple, right? And you can see the focus is, you know, revenue growth. You can see quarter over quarter, it's actually been negative. But when you look at the stock today, it's absolutely amazing. The stock was actually up 1.5% until around 11 o'clock, I believe it was. And just look, it barely moved today. It was barely red at all. It still has not come down to hit the 200 moving average since this move started going up. I mean, isn't that crazy? Still in this falling wedge right here. I'm not sure what it would take to get it to fall, or if they're just waiting for earnings or not. I mean, obviously, we got Tim Cook on a private jet heading over to China, trying to figure out what the heck is going on. I think he's in the store trying to like whip up sales and stuff, probably. But again, it's Apple, so I mean, it just won't drop. Now, speaking of China, Chinese stocks used to react whenever China would come out with positive news and everything, but not anymore, which is kind of worrisome, right? Because this came out yesterday, China's economy grows 4.9% in the third quarter, so it beats forecast. And as I told you, they're cutting down on short selling, they're making the banks a little money, they're doing everything they can, but for some reason, the Chinese stocks just aren't responding anymore to all this stuff. So what's going to push them up and finally stabilize them? Your guess is as good as mine. But if you look at Bible, for example, what is it? It's sitting right at the bottom of this falling wedge, once again, trying to get a technical bounce if it can, as it continues to fall. This right here is basically kind of like the, what is it, the Alamo, whatever, it's last stand. So if it breaks through this right here, then it's going down. Like you look to the left right there, that's the kind of drop it's going to have. So you would think if it's going to get a bounce, it's going to be in that area right there between like 68 and 78. So we'll see. Now, earnings tomorrow, don't have to worry about too much. All you got is American Express, which most likely all you're going to hear about is how much they're putting back for defaults. That's what we got from Discover and some others today. Don't have to worry about any kind of economic data. Just going to have 2 Fed speakers. And I don't know about you, but I've definitely had enough of the Fed speakers because, I mean, there's been like 35,000 this week. I'm just kidding, but it feels like there's been that many, you know. And they even admit, I mean, with the way these yields are going, that's not like another rate hike, right? So the market's kind of betting, saying, I don't think they're going to raise in November for sure, maybe even not in December. They really don't have to if yields and everything stay high and rates keep going up in that sense. You know, it makes sense. But, you know, like we said, I mean, there's 2 different kind of economies, right? I mean, and I didn't make these terms up or nothing, but some people say, well, there's the have-nots and the haves, right? The haves are people who have appreciating assets. They're benefiting from inflation, making good money, you know, buying bonds and everything else, and you know, real estate's gone through the roof. And then there's the other side, which is hardworking people who don't have appreciating assets because they rent. Their car is a depreciating asset, you know, or they own a trailer or live in a trailer. Even if they own it, it's still depreciating, by the way, as far as I know. They still depreciate, you know, and are working hard, but they're the first ones who get laid off normally when tough times come, right? And so they're like, man, what the heck is going on? And so that's what's going. So in a way, you got a recession going on in that side of the economy, but the other side of the economy is like, no, we're good. It's okay. It's all good. And so again, if you truly have $5 trillion or whatever that crazy number is, 2 trillion, whatever it is, sitting in bank accounts, even if it's drawing 3 to 5% interest, that's a lot when you think about it from a nation perspective, right? And again, people aren't making big purchases because nobody wants to go down and pay, you know, over $1,000 a month for a car or these crazy prices for some of these houses, especially here in Florida, with the rates where they're at and stuff. So, you know, but that's where we're at. I don't know. Let me know what you think in the comments. No doubt, like I was telling you, I mean, I can't wait to see the documentary about this age from 2020 to 2024ish. Let's say if we ever do get back to normal. But again, you know, I'm a short-term bullish as far as seasonality if it plays out. But 2024, they keep raising like the guidance, saying the revenues are going to be up and all this stuff. I just don't see how. I mean, it's amazing. I don't. Maybe I'm the only one. Again, but when it comes to 2024, man, woof, that's too far to almost even think about, right? I mean, even though it's less than 3 months away. But I can't believe they keep raising forecasts. It just makes no sense to me. But anyway, hope you guys got something out of it. Please hit that like and subscribe button. I really appreciate all your support. And I'll see you tomorrow.